You're locked in to the Grain Market Talk podcast. Fast updates, market movers, and the grain news you need right now. Trading commodity futures and options involves substantial risk of loss and is not suitable for all investors.
All right, today is May 29th. I've got Jordan with us here today to talk about the grain markets. How's it going, Jordan?
Good. How are you, Mike?
We're doing very good, unlike a lot of the markets today, Jordan. So what we're going to talk about a little bit today is just what moved the markets this week, mainly Iran. Then we're going to talk about just how inflation trade kind of happened this week or didn't, and then kind of break down a little bit of the seasonal stuff going on, and then just 3 quick bullet points with weather, Iran, and China.
Yeah, let's get started because these markets were quite red this week, so lots to talk about here.
Definitely. So a lot of the things leading into the end of the week revolved mainly around the U.S. and Iran conflict going on there. The U.S. and Iran are nearing some type of deal to end the war and reopen the Strait of Hormuz. That absolutely dominated almost all trade headlines through the end of the week and markets. Really led to what I would call fading the inflation trade, Jordan, towards the end of the week. And we saw just red across the board, didn't we?
Yeah, so I would agree totally. You know, last week we would have been trading over $100 there on crude oil, and now this week, you know, another $1.30 lower again today at 87.55 has really seen that energy market back off because, you know, of such easing that we've seen over there in the Middle East, and you know that's kind of bled into that corn market. You know, really taking that premium back out of it, which is where we're at today.
The Iran conflict, I thought this week was interesting because it was very conflicting reports all week. Trump said one thing, Iran said another thing, and then an hour later, you had the opposite headline come out and move the market back the other way. So the market was back and forth a lot this week with headlines regarding the U.S. and Iran situation. And I felt like the market, even trading lower a little bit here now, is growing a little bit numb to the headlines towards the end of the week here, just to the extent that it can't truly buy into a headline anymore. Like when this first came out, I mean, we were moving this crude oil market $5 to $10. Now it seems like it'll get the direction right, but it just can't buy into it continual sessions long, I feel like. And that's kind of stunted a little bit of the upside more. Now they're just fading it to the downside, and they're fading the inflation trade, I think, across all of these markets.
Yeah, I would agree with that. You know, yesterday there was, you know, a couple analysts kind of talking about how, you know, corn was a little bit higher while crude was lower. So, you know, were they kind of decoupling each other? And then today, you know, down pretty hard along with crude oil being a little bit lower. So you kind of want to put them back together. But overall, it seems like, you know, the seasonal and the fundamentals are maybe starting to, you know, fade this corn market a little bit more is what it kind of feels like. And probably more seasonals and fundamentals because demand is still phenomenally good on corn.
Absolutely. So when I look at just a broad overview of what the markets did today specifically, I'm going to have Cade pop up a kind of a live commodity view chart here. And you can see corn was down 9 today, and it was pretty red most of the day. You saw that the July futures month there, that one really broke some pretty key support levels this week. That chart looks pretty nasty, honestly, for old crop. And you've been seeing that in the spread action weakening a little bit too. December corn closed right about that 100-day moving average. So we'll see if that holds. That's going to be a true tell this next week or not. On the soybean market, that held together most of the day, and I feel like it was because soybean oil, couple clicks down there, Cade, that actually held really strong today. We were up over $1 most of the day on soybean oil, and that was with crude oil even being lower. So the soybean oil held together, and I think that helped soybeans hold on most of the day before it kind of fell apart. The wheat market down 12 of the last 13 days. We've ripped off over $1 there in that Kansas City, for example. Been a really red market in that wheat market. And then the S&P 500, kind of your sole one on the screen besides soybean oil, that was trading green today, up 12. That's near record highs there again. And then crude oil at the very bottom of the page with the U.S. dollar being lower. Now, every one of those would make sense probably outside of soybean oil. You were really fading the inflation trade. Crude oil led everything lower with grains, livestocks, pretty much the S&P went higher, the U.S. dollar went lower. Like if you had to say that the war was ending, this is how all of those things would have traded today. So I felt like the markets across many different sectors were very in sync with each other towards the end of the week. And that could have been the fact that we were at the end of the month. They're long pretty much all the things that they were red today. So maybe a little bit of risk off, fading the inflation trade, not quite as much concern anymore. Crude oil's backed off a lot as well. We had a pretty hot PCE price get posted earlier this week that was probably built into the market already, and it didn't include a 20% pullback in crude oil now. So a lot of those things, it seems like, and in the grain market too, it had a lot of bullish things to feed off of for a while, and now it kind of just sits and waits as you got to feed the bull every day, Jordan. And that's what these markets, it seems like, and grains especially, are waiting on that next big thing.
Yeah, and that's exactly right. You kind of got to feed this thing every day. And, you get to this time of year and there just really isn't a lot to feed it, right? You get you get the crop planted in a timely fashion, you get it up out of the ground and, it looks really good, right? It just doesn't need a whole lot of moisture this time of year. So you usually tend to kind of make a high there in early May, and then fall off as you kind of close out May. And that's exactly what's happened this year. And, you kind of look at the seasonal and you dip here around the end of May, and then you kind of move back higher middle of June to the third week of June, because you start talking about a little bit of heat and dryness. So I think this market is, following that to a T as far as seasonal. And then you couple that with, like you've been talking about, this outside market type stuff. And that's what you get when you get a 9 lower today, right? And,
Yeah.
End of the month makes a lot of sense, because you look at, all the commodities in general were red today with equities higher. So, was there some money moving out of the commodities and into the equities at month end?
There are probably, if I would wrap up here, there's probably 3 main things driving this market going forward that we can see pretty clearly today. One is weather. 2 is going to be the Iran conflict, and 3rd would be if China decides to step in and buy anything at some point. There was news, we'll start with China here. There was news this week about them potentially tearing off the tariffs on our imports of soybeans and corn. That would basically show that they may be interested at some point in buying some grains from us, even though economically they probably don't need to. And I mean, lower sow numbers, all of the reserves are somewhat decent still. They probably don't need to. So that's a potential, just something to watch out for down the road. I think if you get a bullish headline like any of those 3 flipping, they're going to quickly react to it, probably, I would say. If we start to worry about inflation again, I think they'll bite on something real quick and trade it. The other one was Iran. That one's probably the upfront closest thing. We're trading a lot of those headlines day to day right now. Hopefully that means we'll get an answer somewhat soon on that situation, even though long term there is infrastructure damage that could play out here. And then don't forget about anything we're in the summertime. We're supposed to be seeing really high energy demand. There could be some problems with consumer sentiment this time of the year as well, as we found out today. And then the third big thing, which would be a very normal seasonal pattern mover for these grain markets historically, would be weather. We were supposed to get some rain in the Western Corn Belt. They kind of pulled a little bit of that out here for the next week now today, but still a decent chance for Nebraska and South Dakota. So we'll see if we get some of those or not. But the majority of the Corn Belt, we're sitting in a very good spot. Most of the weather that has played a impact in this market up till now was in winter wheat country, and that's pretty much, that story seems to be over with as combines start rolling down there on a cruddy crop. So those are the 3 main talking points I think I'm going to be at least focusing on or really keeping a close eye on as we look at this grain market going forward into the summer. Any other final thoughts from you, Jordan, here this week on the row crop markets?
Yeah, so I think you're spot on with those 3 bullet points. And, the one thing I would maybe add to that is, we'll get a look at acres here. And, do we see a little bit of shift on, a little less corn compared to soybeans? That could be one thing that, also kind of pops up here as we kind of move through the growing season. And then, the demand side continues to be extremely strong. And, if you get China to come in here and buy a little bit, that would be huge. But, even looking at exports today, we could see a little bit of a bump on old crop exports, even without China. So, demand is very solid, is on very solid footing.
Demand is definitely solid. All right. Thank you for joining me today, Jordan. Thank you for tuning in today. Please click the link in the description below. Please hit the subscribe button. We really appreciate it. Go to our website at professionalagmarketing.com.